Welcome to the weekend here on the Culture of Currency. That means we have another Wall Street Journal market report. As you know, metals went crazy this week. We saw gold and silver and, yes, copper fly really, really high. So we'll be able to digest that a little bit and see what the markets did this week. Many of you probably already know it was not the best day for stocks and things like that, but that's a conversation worth getting into for sure, and we will intend to do that on a macro scale as we go down the lane. So let's go ahead and get into our market digest with this exchange. Right here, the week that smart money got whipped. They're talking about hedge fund managers. If you don't know what a hedge fund is, they basically are corporations such as Vanguard, Fidelity, things like that. And what they do is they end up owning so much of a company's stocks that they end up being on the board seats of a lot of these companies. So if you go to Disney or many of these others, they end up owning billions in assets for these companies and end up having enough market share where they have representatives of the hedge funds on the actual boards of the company. I kind of feel like that's a conflict of interest, but you know what? They didn't ask me, so it is what it is there. Here we are. Let's go ahead and get into it. Dow Jones Industrial, probably my favorite of the major three. What a ride. So we see this week we had quite a bit of a tumble. We have a much longer average here, but we still see it going down. Yes, but as you notice at the very, very end, it did ship back up, which is why this exists. Yes, we know it went down, but at the very, very end, because this is talking about just where it closed, we saw a gain of 1.65%, which is reflective right there. It obviously does not tell the full story. It just says, hey, you went down a slide, but then you got back on the first step. So it is what it is. S&P 500, same rules apply. Much steeper slide and a little bit of a check right here, a correction, as we see right there with a positive growth, but he went down quite far just to take a step forward. Here's the NASDAQ composite right there. Same rules apply. We have our elongated, our steep slope, and our little correction there, leaving us positive for the end of the week, but obviously not in the collective journey. So you got to be careful with that if that's something you care about. Next thing, tracking the markets. My favorite part, the winners and losers. And look who's on top here. The big three. We have COMEX Silver right there, 5% growth. And if you didn't know, I may have started a study here recently, and the math checks out on this. The logic is the hard part to wrap around people's heads, and it may not work out. I don't know, but I started a study where when silver goes high, I sell, and when silver goes low, I buy. And this was the first phase of doing that. So I took 10 ounces of silver and sold it yesterday for $33 an ounce. And then when it goes down to $30 an ounce, if I can find where I can buy it for $30 an ounce, it might be a couple months from now, who knows, then I will be able to buy with the money I made 11 ounces. So I'll have 1 ounce for free. And then we'll just keep on repeating that and trying to figure out kind of how that works, if that works, so on and so forth. But do look forward to that series. So yes, silver is on top. Copper right there, 3.98. It had a rough week last week. And of course, gold sits there at 3% as well. We know gold hit an all-time high, $3,000. The $3,000 club has finally been hit by COMEX Gold. Really, really cool stuff here. But notice what else? A lot of currency and commodity, which tells you everything else is past our line of demarcation in the loser category. The dollar just barely is a loser this week, but most of our composite indexes, things like that, fall down here, the S&P industrials and things like that. So everything else got hit pretty hard. Natural gas, it's obviously getting much warmer here in the States, and so my guess is the demand is causing that to go down. That's not necessarily a bad thing, but your Dow Jones Industrial, your S&P Health, your consumer discretionary, all that kind of stuff went down. So that's something that is interesting there. Another very interesting thing that I happen to see, if we look right here, this is the stock indexes. Some of the major ones that we talk about. We have the Dow Jones Industrial. As you see, year to date, it's negative 2.5%. So I know a lot of people feel like it's negative 10% based on the news. Well, the reality is not true. A lot of people like to tote, one way or the other side of the stock market, depending on what side of the aisle you are on. But the numbers are right here, and the numbers are not necessarily as political. So we are negative 2.5% for the year on the Dow Jones Industrial. Now, for the NASDAQ stock index, it is more dramatic. Negative 8% right there. And that is, fairly normal to have a bit more volatility there. But hey, that means stocks are on sale. So that's always how I see it, at least. If you have disposable income, that means it's a good time to buy in because stocks are on sale. S&P 500, 4% below. We have the Russell 200 sitting at negative 8%. And looky here, I drew a big pink line because I was so proud of it. The gold and silver right here, positive 23%. Now, I'm not sure if this is talking about the COMEX prices or what, so I'll have to look into that. But we do notice that that number is not negative, and it is quite positive. So correlation without causation, you tell me. So that was all interesting. And another thing I found extremely interesting right here, the Treasury yield to maturity of current bills, notes, and bonds. That's a big thing. But look, 1 year ago, it was on the way down. And here we are. And it looks like we're on the way up. So that's interesting, which, when we talk about cutting waste and all this other stuff, I'm wondering if those things are affecting these treasury bonds. So that's something I don't know a lot about. Maybe you do. Let me know in the comments. But I thought that was an interesting metric. Is a year ago, things were on the swing down, and right now, things are on the swing up. So not all doom and gloom. I hope you enjoyed today. I hope you enjoyed your morning with me, learning about what happened this week in some stocks. And in obviously our favorite thing here, the metals. But that's what we have for you today. So as always, please remember to stay classy and current with the culture of currency.